Good afternoon, everybody. Welcome to your Thursday edition of the TraderMerlin show. An exciting one to be sure, based off what Mr. Powell was talking about. And of course, if you watch the Monday Morning Must-Knows I put out for Online Trading Academy, we talked about specifically this meeting today where he's talking to the Bank of International Settlements and making some statements about our currency and yields. And lo and behold, tanked the market off of his comments. We'll talk about that today when we talk about our overall discussion was going to be front-loading rates. I had to throw a little backhoe or front loader here and have a little fun with the graphics. Just for everybody who was expecting Brendan Wendell to be on the show today, unfortunately, he had to teach a class in, I think, Fort Lauderdale today. Didn't tell me, so I found out last second, but we'll get him back on here at some point in the future. Good to see you, TC. You've finally catching us live, huh? All right. Well, good afternoon, everybody. Good to see you, Boss, TC, Katut, Thomasina, Margaret, Tom, Eric, Giselle, Les, and others. I'm going to have to do a short show today because I have to run into the office to go to the studio to shoot some videos as I will be traveling to Northern California tomorrow and enjoying hopefully some nice warm weather and hanging out with some family and friends, which means no show tomorrow. There you go. That was the long-winded way for me to say no show tomorrow. Hello, Randall. All right, let's talk about the whole front-loading of rates thing. Obviously, we've been talking about this quite a bit over the past few months, especially when we have Bill Addis in the program to talk about, you know, the major pieces that are facing our market. And anytime Jerome Powell is in front of a camera speaking, hell, even behind a camera, just an interview or anything, it's kind of critical to know the day that he's presenting. Now, as markets evolve, something I've learned is it will always flow from something that's a hot topic and market mover, where a year, 2 years later, that topic is no longer relevant. So, for example, if you look at the talk about inflation for the past 2 years, it really wasn't that big of a deal. Now, all of a sudden, in the past, let's say 6 to 8 months, it's become a significant deal. And it's like on the tip of everybody's tongue. Everyone's really, I guess, waiting with bated breath to see what the Fed does because now it's all about inflation. And, of course, the man who's dictating what the war will be on inflation, which we are in a financial war, is Jerome Powell. So that announcement today when he was speaking with Lagarde was an interesting one. Why I think it's very interesting is what it did to the expectations for rates. So we had talked, I think last week, maybe even earlier part of this week, where we talked about the potential for a 50 basis point increase at the next meeting. Well, let's go look at what the markets are predicting. So here's the CME Fed Funds futures, and you can see that there's a 97.6% chance we're going to see a 50 basis point increase in the Fed funds rate happening on May 4th, which is just a couple weeks away. Now, why is that important? Well, it's important because the markets already expected it, but Jerome Powell pretty much verified it when he said that he's okay with front-loading the markets. And what that means is they're going to be very aggressive now and less aggressive later. So what it breaks down to me in layman's terms is they're going, oh crap, this is a big deal. We have to be much more aggressive right now. There is no time to wait. We can't do 25 basis points and another 25. We got to go 50 and maybe even more than that right now and punch this thing in the mouth and hopefully stop inflation. Of course, I think everybody here understands the impacts for the market. That's obviously going to create some jitters because the higher those rates go, the more it constricts our economy and the more potential there is for a recession, and then stagflation creeps into the discussion. So here's what I wanted to focus on was if Jerome Powell was pretty confident about front loading, I'm actually kind of surprised that we didn't see 75 basis point potential. So right now we're at 25 to 50, right? And you can see there's only a 2.4% chance we increase 25 basis points. He's a year late. Totally. Good point, Tom. That's actually a really good point. Tom says front loading. He's a year late. That's back loading. Yeah, well, you know what? While I totally agree with you, 100%, I think it's the perception by the people in the market that this is front loading. I think I actually did a show early last year. I was like, hey, inflation's giving me an issue. We're going to see rates start to rise here soon. And we didn't see that for a long time. Hey, Chris, text me or message me the address of your shop. I'm going to be swinging through Friday, and I might actually swing by and say hi. Yeah, so it's definitely not transitory. I think it's kind of interesting that it could be this aggressive. Now, only a 2.4% chance of a rate increase of 25 basis points. Everybody is basically saying, no doubt about it, 100%. We're at 97.6% confirmation we'll have 50 basis points. But that's not the interesting piece. You notice that if we go to from 0.75 to 1, that would be a 50 basis point increase. But look at the June meeting, just going out to the next meeting, June 15th. To raise it another 50 basis points, there's only a 35% chance that. They're already factoring in a 64% chance of a 75 basis point increase by June. Now, put that into perspective. That means that the Fed funds rate is going to have risen if these expectations are met. And by the way, these are traders who are putting money on the line. You've got 50 at this meeting, and then potentially 75 at the next meeting. And we had 25 at our previous. That means you're going to see an increase in the Fed funds rate of 1.5% in just 5 months. To me, that is extremely aggressive. And of course, you look at what happened out there today with, let's say, the 10-year. Let's bring up that chart. I would not want to be in Jerome Powell's camp right now. Here is your 10-year. Now, this is a 5-minute. Let's go to the daily. You know, we're still hesitating up here a little bit, but I agree with Scott McCormick. I think you're going to see this thing surge and break this 3%, especially if the market's already pricing another 75 basis point increase. Now, I mentioned in previous shows that the December number was pricing in 12 increases. Right now, you're seeing that number increase as well. It's still pricing into 2.75 to 3%, which, of course, we could do our math. We're at, let's call it 25 now. Let's do our math here. We got 25, 50, 75, 1, 25, 50, 75, 2, 25, 50, 75. So there's 10. Would bring us up to 3. So 10 more rate increases. And if you look here, you can see that just in one day how much it's changed. A week ago, they were pricing the market to be between 2.5 and 2.75. That was the number. And you can see steadily that it's been increasing. Right now, we're at a 43% chance we're going to be at 3% by the end of the year. And that, of course, could be significant for our equity market. So I agree, Tom. I think it's kind of comical to call this front loading, but they use that term because I guess the reason they're called front loading is it was this expectation of a slow, steady increase in the Fed funds futures or Fed funds rate. In this case, it's like they took a small step and then all of a sudden they're taking some much bigger steps to really slow this thing down. Love it. I think it paints a very negative picture for overall markets, which of course for me is fine. I'm great. Let's have some downside in markets. Let's have a little bit of panic and fear for a moment. I think when you have a bear market, especially one that is maybe prolonged for, let's say, a year, you really start to see who are the real traders, right? Anybody can make money in an up market. You just buy something, you hold on to it, and you make money, unless it's Netflix off a Jim Cramer pick, and that's a whole different story. So we'll have to wait and see how it all pans out, but the noose is tightening on the yields and Fed funds futures here, which is very, very interesting. All right, that was it. That was all I had to say for Fed funds futures. Let me go to a couple different pieces here for today. Obviously, earnings are still in play, and most of the stuff out there was great today. Everybody beat earnings except AT&T. Surprise, surprise. Snapchat. That I was almost going to call that the popcorn trade of the day, but I will bring up Snap here for you guys just so you can see that one in the after-hours session has been an interesting SNAP. There you go. Sideways and down is fun for me, right? Any moment that you can, any moment you can make money on, to me, that's the fun market. Chris is going to drag crypto down with it. It already did. I mean, you saw the about face that happened in Bitcoin today. It was a significant drop in what happened with Bitcoin during regular market hours. Now, here is the chart of Snapchat, and right now you can see it was in a fairly aggressive downtrend, going from 40 all the way down to right around 30. Well, when I switch over to a 5-minute, you'll see major swings in the after-hours session. It had a huge drop. Went from like $30 all the way down to 23. That's a huge drop, and then ripped right back up to 32, and now just chopping sideways. My Bitcoin is injured. Yeah, mine's got a bloody nose as well, TC. My whole crypto portfolio took it on the chin. But there's your Snapchat on earnings today. Oops. There's your Snapchat on earnings today, and that was probably one of the most significant ones. The one that I actually want to go and read the earnings call is Freeport-McMoRan, FCX. Huge fan of Freeport-McMoRan for the long haul. They were down big today, 9% slide on their earnings. They actually reported before market open. They beat earnings by 21%, and they were still down over 9%. Pretty rough day out there for Freeport-McMoRan, which, of course, is in the natural resources category. One heck of a chart. Man, I actually owned this thing a while back. Let's see, where was it? I owned it. I owned it here when it was at $4 in 2006. It's funny because I owned it back here in 2015, 16 at $4, and I sold this thing at like $8 and change, and I was so excited that I had this 100% gain. And you're like, why didn't you hold it to 52? You idiot. Cool. Other than that, not much to talk about with the earnings. So I'm going to shift gears here and go into DWAC got killed. Who cares? Here's DWAC. Garbage. Trash. I'm just going to hold it as well, Chris. My crypto is long haul. By the way, has anybody watched this show, the series on Netflix called Dirty Money? Episode number 1 is about Wells Fargo. Absolutely fascinating. Episode number 2 really points the finger at Goldman Sachs. And episode 3 points the finger at Jared Kushner, who I always thought came across as kind of slimy on TV. What a scumbag. I mean, you talk about low-life scum and what they're doing. I mean, I'm sure that there's some portrayal of maybe Hollywoodization on it, but boy, watch that series Dirty Money. It is pretty brutal. It just makes me lose a lot of, not that I had much respect for the financial institutions anyway, but boy, the amount of greed is just absolutely unbelievable with these companies. Yeah, it's a pretty good series. Anyway, here's your DWAC. Speaking of, Kushner was the right-hand man of President Trump, and here's President Trump's media company, which, anybody seen anything yet? I mean, and got a working platform yet? You doing anything? Got a Twitter feed out there? Nope. So I don't really expect this to go anywhere. I mean, I don't see anything developing on it, especially with Elon Musk taking on Twitter and potentially creating a much more open, freer platform. I just don't see a future in DWAC. You would not get me to buy this one with anybody's money. I would actually be looking at shorting it, as it'll probably go back down to $10 in my opinion. But that's just my opinion. POS, I agree with you, Christian. Point of sale. We'll keep that clean. What else do I have? Skilled Stocksman. I know you usually don't watch live. You usually watch the archives. Hopefully you're watching today because you asked me an interesting thing about trade management and how you analyze. So here's Skilled Stocksman's question. It says, using trade manager analysis from TradeStation, in that trade report history, what matters most to you and why? Because there is quite a lot of info in there. But if we understand the numbers and what matters most, then a trading log can be essential. I'm asking for TradeStation, but I bet other traders on other platforms can convert your info to theirs if they try. Sure, I will definitely bring that one up. So let me bring up TradeStation here. And I don't have any active trades on TradeStation, so what I did is I just made up a whole bunch of I just basically bought Bitcoin futures, which is probably going to kill me right now, just to have some trades going. So let me close out of all this. And let's see, what am I long? I'm long, so we'll just go sell. Can't route the order. Oh, isn't that nice? Even in Simulator, you can't route the order. All right, well, it's not going to let me do anything with it, so I will just go and show you the trade manager. So in a lot of platforms, you have an analysis manager where it will go through and map out your trades, what you've done. And like I said, I just fired off trades. These are not actual trades. These are just simulation ones because I wanted to put something in here. Now, the question from Skilled Stocksman is great. There's almost too much in here. So you can see one really cool thing about what TradeStation does, and your platform probably does this as well, is it will break down all your trades and then kind of segregate them by long and short trades. This is actually where I learned that I am much more profitable as a short trader. Not only do I make more profit there, but I also have more success, meaning my win rate is better. So what am I looking for when you look at trade reviews and analyzing your trades? Well, first off, there's a lot of data in here that you're not going to get, meaning it doesn't break down and say, what's your most profitable security, right? Do you trade Apple better than Intel? Do you trade Cisco better than Bitcoin? It doesn't tell you any of that. It just breaks it apart by long and short and duration. So let's see. Obviously, the one that most people are going to focus on is total net profit, right? Well, that's all fine and dandy. But to understand what you're doing right or doing wrong, it's really about breaking down this detail. So I like to look at these numbers here, where it talks about specific trades. Now, as you can see, there were no winning trades. I made 2 trades. I went long Bitcoin and short the S&P, and they both stopped out and lost. So normally what I want to see is the percent profitable. So if you have a percent profitable of 80, let's say you have 80%, I have an eye for equities that are falling. I do. If you have a win percentage of 80, then you're doing something right. Your analysis is good. Now it's a factor of, how many trades you're doing and how big are those winning trades. Because you could have 80% winning trades, but each trade only makes you $5, yet you have one losing trade that takes away $1,000. Well, you're a net loser, even though you're right 80% of the time. See if I can try to make this bigger for you all so you can see it. So I am a huge fan of looking at the profitable percentage, but that's not the only piece, right? I want to know what the net profit or loss per trade is. That's key. So net profit, let's see. NB says, I'm Ron. How do you use daily, weekly, monthly, average, your range? Some people use, okay, I'll get to that in a sec. So Skilled Stocksman, this is pretty much what I want to look at. I want to look at profitable percentage, so I know kind of how am I hitting the ball. And then it's a question of how hard am I hitting the ball, and that is your net trade profit. Like how much am I making on each trade? So again, if I wish I had some positive numbers in here, but I have delayed data as well, so it's just not working right now. If you have a few winning trades, let's say 2 winning trades and 10 losers, and you have your winners are 10 times your losses, well, yeah, you'll be making money, but I don't think you can call yourself a good trader if let's say you take 10 trades and you're winning 2 and losing 8. Even if you're making money, to me, that's wrong. I believe that you could actually flip a coin, go 50-50, and on any trade and make 50-50 success rate. So now it's a question of how do we manage those trades. So you can also go in here, I believe it's in this one. This tells you a little bit about your share sizes, etc., but it just says maximum number of shares or contract held. So that might be useful to you in helping determine your size, but I actually prefer to track that myself. I want to see, what is my share size? Where do I start to get to that point where I get sweaty palms? You all have a number where you go, whatever, 5 shares of Google is no big deal, but man, you get me to 1,000 and it's sweaty palmville and I'm not focusing correctly, I'm nervous and rocking back and forth. You have to find out what your number is, and that's a key for me anyway to prevent myself from getting in those crazy situations where I lose a lot. This one is also interesting, time period. So it tells you the average time that you're in a trade. I don't think that really helps you develop your trading style very much, other than maybe you can see if you're being impatient or not. I think that what's really important is finding the time of day that you're trading the best, right? So if you can come up with a little matrix of the trading day, and let's see if I can just do something like that for you for fun. How much time do I got left? I have like 10 questions I want to get to. Where are we? I'm right there. Bear with me as I draw something out here, do some artwork for you. All right, let's go to that. Okay, so I will switch to that and go one past. There we go. So what I recommend for everybody is, let me see, if you have a grid or an XY axis of the trading day, so here's your day, is map out what your profit curve looks like. This is going to have to be manual. So here's profit or loss. And I think it's interesting, I mentioned this before, that it used to be when I was on that day trading floor, my curve looked like this. And quite often, actually it wouldn't be that aggressive. Let me delete that one. It would be actually more of a lean curve like this. And sometimes I actually even would do this. And then right near the end of the day, I would come back up. So there was times you're like, well, there's really 3 solutions you have here. You can just map out what part of the day you're making money. So this is a big loss. Oh my goodness. Merlin, your art skills are failing us today. Here's your loss. This is a gain. Here's your gain. Sorry. So really, this gets eliminated in my book, right? I can get rid of all that. Who cares? If you know you're losing, then just move away from it. Oh my goodness, what is going on here? And then I can just focus on those first 2. That's simple analysis where you can start to break down what you're doing right and what you're doing wrong. And I know my artwork here is absolutely awful. I apologize for that. But I think this is something that most traders do not do, is identify, if you are a short term especially, what's working, what's not, what time of day might be working for you, etc. So yeah, that trade manager analysis from TradeStation is great. I'm pretty sure everybody has it in their platform. They also talk about max drawdown, which means what were you, for each trade, what's the maximum that you were down on those trades. And if your stop loss is, let's say, $200, then you should never have this number bigger than 200, right? It should always be 200. Anyway, that's question numero uno from, who was that from? Skilled Stocksman. Thank you for that one. And I find it, when's my book available to buy? I don't know. It's going to be a white elephant. That thing's, it'll be my I'll have someone read it at my eulogy. Just read the book. Okay, Landis, down in Singapore. I think he's still in Singapore. Asked this question. What happens to our shares if Twitter goes private? Historically, what usually happens? Well, what happens is your shares disappear. Basically, what would happen is you would now, if you had 1,000 shares of Twitter in your account sitting at Charles Schwab or something, those shares would disappear, and you would now have $54,200. Remember, he's going to buy it for $54.20. Therefore, you had 1,000 shares minus commissions, which they really shouldn't even charge you a commission, but they're going to charge you a commission. But that's what would happen. It just simply transfers over. Nothing you have to do. I know. TC, let's look at that one because I was eyeballing that today. I wanted to, but it didn't meet my number. It did not meet my number. And I'm hoping that some of you maybe took this short today on Tesla because I said I think it's going to open up and then tank from there. But I really wanted it to come up into here. I needed it to be up at least like 1140 to 1150 was my number, and it didn't get there. But look at the 5 minute here. This is gorgeous. I'll do 15. You can see these little blue and gold boxes are aftermarket and pre-market. So just mapping out the times there. You can see that it opened up pretty much at its dead high and pretty much did nothing but crater all day long. And then if you add in the volume here, you can see you had real high spikes of volume right as that happened. Would not be surprised to see that Elon Musk sold a little bit of his Tesla shares to free up some capital. But to me, that was a pretty easy trade to make, but it didn't meet my number, so I couldn't do it. If we go back to the 15, I was looking right here. 1536 to 1550 would have been where I wanted. So unfortunately, didn't make it. Did anybody take the short on Tesla today? Any of you guys take the Tesla? I do 0 day to expiration to 60 day to expiration option trades, selling iron flies and spreads. I recently sorted my log and charted. 5 dated expiration. There you go. But hey, and I'm glad you're doing that, Tom. Again, I've worked with thousands of traders. I mean, it's weird to say it, from all around the world for so long. The vast majority, I would say, even out of people who've taken classes at OTA, or they still don't want to take the time to get into the weeds and say, here's what I'm doing. Right? If you've analyzed that to 0 to 60s and say, hey, I'm most successful on the 5 day to 30 day, you already have a huge advantage over anybody else out there because you know exactly what's working for you. Don't try to justify why they work. Forget that. Who cares, right? Bottom line is, if you're doing better with the 5s to the 30s, then stay there. What's a good platform to trade futures? I like Trade Pro Futures just because, I know the guy who runs the show, Trey Lazara, who's awesome, and they have some of the best margins in the business, and they have like 5 different platforms you can use. I have the opportunity to get humbled immensely by the NQ today. Sorry, Nick. That was an abrupt face, wasn't it? Let's go to the NQ. It was a rough sell-off there. I mean, that thing happened fast, too. Thank you, Mr. Powell. There's your real quick move. Well, I'm hoping you had a stop loss in there, Nick. I mean, there's so much writing on the wall that's pointing down, yet the markets just keep persisting up. It's not going to take much to be the straw that breaks the camel's back here, and we're pretty damn close. Lori says, hold a bear call spread and close it for an 80% profit today. Yeah! Nice. Good job, Lori. Same with Brian. Sold a bear call on Tesla. Great. I was waiting for Tesla to get over 1100. Yeah. You know what, Joe? Don't worry about it. Don't worry about that stuff. If it doesn't get to it, it doesn't get to it. It's unfortunate because you look at what happened, you're like, man, that would have been a great opportunity. But it is what it is. There'll be something else tomorrow. Not for me, because I will not be trading as I'm driving, but it should be fun. All right. Again, I'm just trying to rip through questions here. Apologize for the hasty show. And I know we're all over the place, and I know that a lot of you don't like this topic, but I'm going to go through it anyway. I think it's an interesting one. Cookie Cutter posted this on... yes, I'll get to that one in a second, MB. Cookie Cutter sent this one and said, how can we find out what the purpose for the coin is? Purpose is for the coins. This has to do with crypto, and as you guys know, my take on it, the vast majority of cryptocurrencies, there's 20,000+ different cryptocurrencies, far more cryptos than there are stocks to trade in the United States. The vast majority are shit coins. They're pump and dumps, they're scams, they're absolute garbage, and you shouldn't even touch them. That said, let's say out of that, I'll say 90% are garbage. All right, 90% are just trash and should be removed. So how do you find out what they do? You got to dig. You have to go out to different sites. And the first thing I do, if I'm looking at something to invest in, I think I now have I have to map it out. I think I have 39 different cryptos right now. And that doesn't include the ones that were given to me through airdrops, because there's like, $2 positions. But if you really want to learn about them, you use the product. So if I want to use Solana and figure out what the deal is with Solana, what's the purpose? Well, it's a layer 1 blockchain. So to access the layer 1, that's why you would use Solana. But I'm using these platforms. I'm out there using Radium and Francium and all sorts of weird projects on Solana and Ethereum and Avalanche, testing out different things. And if I like them, I'll go buy those. The session we did today for our Crypto Investor Live program was focusing on, I went over probably 30 different decentralized gaming apps, metaverse applications, and gaming hosting development platforms, right? Those are all very interesting, but which one's going to be the lead dog for that sector? I don't know. So I go out there and I play them. I see what's the utility of this token? Is there a good development team, right? Are there people working with it? Is there if you go to GitHub, is there a community supporting these projects? Most are scams. I still firmly believe that Shiba Inu is like the ultimate scam. However, it was on the top 10. I think Dogecoin is back in the top 10, which is also a joke. It says in the description, it's a meme coin. Meme coin means what? It's a joke. It's a joke and you bought it. So that's how you find out, Cookie. There is no specific site. Don't take anybody's word for a project. Go out there and do your research and look at a lot of different sites. There's a couple people on the internet that are pretty good at analysis and breaking down different cryptocurrencies. Start to follow some people out there and learn from them and their mistakes and their experiences. All right, NB asked me, how do you use daily, weekly, and monthly average true range? Some people use 70% of ATR. Can you confirm it? Nope, I don't use 70% of ATR. It's my use of ATR is specifically for stop losses, and the analogy I've used before, and I've drawn that picture, actually I did it today in my Crypto Investor Live program, is the dog in the front yard. And so here, just because I'm a goober and I may as well just do it, what time I got? Okay, I'm supposed to end the show in 2 minutes. That's not going to happen. Not going to happen. All because of NB. You guys can all heckle NB for prolonging the show. Just kidding, NB. I appreciate it. I won't draw it. It's going to take me too long. So ATR, if you're looking at making your entry, let's say you're a swing trader or a position trader, and you're looking at the daily chart, and you say, okay, my entry is going to be on the daily, right? That's where I'm looking at the entry price. Well, what I'm going to do is I'm pulling up the ATR, and I use all the ATR plus some. Why would you go less than the ATR? The ATR tells you how long the leash is. Right? So again, the analogy of there's a stake in the front yard, there's the meanest, ugliest dog you've ever seen in your life, and you're scared to death of this thing, and it's snarling and slobbering all over the place, got rabies like Cujo. If that thing runs and it stops at 10 feet because its leash is only 10 feet long, you're telling me you want to use 70% of that leash? So now you're going to be 7 feet away from the middle post. That dog's going to bite you. Your odds of getting taken out, highly increased. So for me, I'll go daily ATR plus a little bit. So I'm outside the range of what is normal, so I don't get taken out. And of course, you coincide these things with supply and demand zones, and that gives you a little better probability that you're going to remain in that trade, accommodating for the normal fluctuations of price. There you go. Did I get that one? I think I covered that one, NB. When do you predict we will be able to use crypto just like dollars worldwide, and which coin will it be? Hell if I know, man. Hell if I know. Bitcoin will be there. Layer 2 technologies may actually make Bitcoin much more of a commerce piece, but I don't know which one's going to be there or how long it's going to take. Most likely we'll have a central bank digital currency before we have mainstream adoption of crypto. As soon as the CBDC is implemented, then I think crypto becomes much more legitimate, and then you'll start to see some of these other platforms arise. But which one? I don't know. That's why I have kind of a broad platform, a broad portfolio. And not just from currency transaction stuff, but from smart contract platforms to gaming to identity tokens. I'm trying to run the gamut of different things. Kathy Wood sold $66 million worth of Tesla yesterday. Can you blame her? I mean, to me, it's pretty clear that Elon's going to have to sell. So she sells $66 million yesterday. What do you think Elon Musk has sold today? A couple billion, probably. Is it reasonable to assume that more downside will continue since VIX has not spiked? Reasonable. That's a tough one. I mean, VIX did spike today, but it's not up at any real dramatic high range. You're not up above 40. So yeah, I still think what it's pricing in right now, it's basically saying that people aren't that afraid of the markets correcting, and I think that that's a mistake. I don't usually trade the VIX products, but I do see more upside here for the VIX than downside. For those who don't know, this is basically inverse of what the S&P is going to do. So if the S&P sells off aggressively, VIX should spike. It just represents fears out there. Coinbase gives you a little breakdown of each crypto's purpose on its trade page. They do, but my problem with Coinbase is I don't trust them. They list Shiba Inu and Dogecoin. Right away, those are pump and dump meme coins. Those are jokes. There's no use case. There's not real utility for those. Now they're starting to be for Dogecoin, so I kind of lose a little bit of respect for Coinbase. You shouldn't even list those things. If you know that it's going to be dangerous for some investor, that ultimately what's going to happen is someone's going to be left holding the bag on this shitcoin, you shouldn't list it. And I get it. It's greed. You want to make transactions, and hey, people are going to buy it anyway. I wouldn't sell it. I wouldn't sell it. If you knew... Let me just go back. Let's say you were a bartender and you work at one of the more popular bars in town, and there's this really hot beverage that everybody wants to drink, but it's proven to cause cancer. You going to sell it at your bar? Everyone's buying it. It's proven, documented. It causes cancer. It is going to kill you at some point. Would you sell it in your bar? My answer, hell no. I'd rather look at the well-being of my customers and the people that I work with and humanity as a whole than worry about making a couple extra bucks to sell this hot thing that everybody wants. But that's just difference of people. All right. I'm actually past my time. I got to run. Let me show you a couple things here. Echo, you asked a great question about sector rotation model, and Tom, you had one about the SPX versus SPY. The reason that you have that disparity between SPX and SPY is because of dividends and management fees. There's a quarterly dividend that's paid on SPY, so that skews that chart, which I can bring up another time. I just don't have time today. Last piece, gratuitous plug. I believe the bear's out of his cave. He's not roaring yet, but I think he's poking his head out. I think he poked his head out about a month ago. He's like, hey, I'm here. And then the market said, no, you're not. And he's like, hey, I'm over here. All right, so for those who might be new to this one, I have a presentation I'm giving up in Las Vegas. I will be there May 10th and 11th. My presentation is on May 11th. For anybody who wants to attend, you can click on this link that I'm going to throw into the chat and put in the code OTA50. Oh, where'd I go? There you go. OTA50 is your code, and that will saves you something. Saves you something on the, hey, Northside, good to see you. Been a while. That will save you something on the admission into that event. So last piece here is what's happening for tomorrow. Verizon Communications, Schlumberger, HCA, AXP, which is American Express, and Kimberly-Clark will be reporting earnings tomorrow. I bring that all up because I will not be here tomorrow, as the question came in from Margaret. It says, when's your next show? My next show will be on Monday. I'm just going to take... look, I'll probably be so bored in the car, I could put the phone in the dashboard and drive up to Lake Tahoe talking about, or not to Lake Tahoe, but to NorCal, and do a live stream that way. But I'll tell you what, my trip is, I already have 6 different podcasts of Lex Friedman on my USB drive in my truck, and I listen to those all the way up there. It's actually some of the best conversations and best interviews I've seen in a long time. It's pretty awesome. So if you get a chance, check out Lex Friedman's podcast on YouTube. He's got a lot of great guests in subject matters that interest me. So I've got Michael Saylor, I've got Elon Musk lined up, and 3 or 4 other ones that are all ready to go. They're all 4-hour interviews, so it's going to be a fun drive. All right, everybody, that's going to do it for me. I got to run to the office. If you have comments, questions, feedback, put them down below the video on the YouTube channel. Again, that helps, and those have been putting comments. Thank you. I usually get to those first, but I'm a little behind on comments today. You can also email me at TraderMerlin@gmail.com. Hope you guys have a fantastic weekend. Be careful out there on Friday because of the news that happened with Jerome Powell. Could create a little more volatility, and you're not out of the woods with this Twitter stuff yet. It's going to be fun. I'll see you all on Monday. Take care.